Welcome to everyone. In this video you're going to learn how to calculate a price targets in stock market using cycles. If you like this video, don't forget to subscribe, click on the like button and on the bell to make sure you don't miss any future videos. Before we start, make sure you read carefully the disclaimer. This video is for educational purpose. With the Hurst method, it's possible to calculate in advance some price targets in stock market, and is usually very accurate. This table represents the success rate for the year 2022. This shows the percentage of accuracy of the prices meeting or exceeding their targets on the upside or on the downside. To be considerate, meet the prices have to be within 1% of the target. 1% of margin of error is allowed. How can we get the price targets? The prices targets are calculated when the market cross above or below the cycle lines. What are the cycle lines? The cycle lines is what Hurst called the FLD. FLD stand for future line of demarcation, but to make it easy, I will call them the cycle lines. It's one sometimes two lines representing the midpoint of the price, displaced into the future by a certain number of days, depending which cycle you are dealing with. For example, if you deal with the 20-day cycle, it's the 20-day divide by 2 plus 1 day equals 11. So we displace by 11 days into the future the midpoint price. To be valid, first is the midpoint, not a part of the bar chart, and when there is two lines the midpoint have to cross the both line. Otherwise, the signal is not valid. How to calculate the targets? On this chart the price cross above his cycle line at 29,551 and 29,350. You take the crossing point, minus the low. Add the difference to the crossing point and you have 30,441 and 30,039 as a target zone. This chart is for the potential target on the downside. In this case you subtract the high from the crossing point. Then subtract the difference from the crossing point. This gives you 32,699 as a potential target. Let's analyze the present chart. This chart represents the 80 days cycle. We have a crossing point at 30,772 and 31,086. Calculate the difference between these 2 points and the previous low. Add to the crossing point. This gives you a potential upside target zone between 33,511 and 32,884. About 10 days later the market meet the lower part of the target zone and keep moving up until forming a high at 34,550. The signal provided by the cycle line is still valid until the market cross back on the other side the cycle lines. If the market cross back below his cycle line before meeting the targets, this will invalid the target. When this happens, this will give another important signal. We will see later why this occur. Now from the 34,550 high the market declined from his 80 days cycle peak. Cross below the first cycle line providing the first target. But the midpoint price is right on the second cycle line, so we have to wait to calculate the second price target for the bottom part of the target zone. When the market missed the targets, what that's mean? Sometime the market missed the targets. This doesn't mean the signal are not good, it's just signal a possible change in trend. If the upside potential target are missed, this means there is some bearishness coming in the market. When the downside potential target are not met, this signals some bullishness in the market, as we can see on the next slide. On May 26 we had an upside crossing for a target zone between 34,709 and 34,098. The market crossed back below his cycle line 17 days later, without meeting his target. It was a bearish sign and this provided a downside target which has been met 5 days later. Can we anticipate this? There is no perfect solution, but we can try to anticipate this problem by going to the lower time cycle. In this case we dealing with the 40 days cycle. The next lower degree cycle is the 20 days. If on the 20-day cycle, the market missed his target, then we can expect the 40 days will miss his target too. Meaning there is some bearishness in the market. But of course, like any other technique, this cannot be used alone, you can use it with some other technical analysis tools. This is the end of this video. Thank you for following me. If you like this video, don't forget to subscribe, click on the like button and on the bell to make sure you don't miss any future videos.